Yeah, I think that what gold represents is, truthfully, will be a cornerstone to whatever new system arises. I think that it's very difficult to get people to drink the Kool-Aid again after the mismanagement of the dollar as the world reserve currency. And what gold represents, not only to the BRICS, but I think to all of the central banks, is stability. It is a tether to the fact that politicians throughout all of history have chosen inflation over austerity, and you will not be able, I think, to issue a new system if it is not backed by something. So yeah, I think this is real this time.
Central bank gold buying takes off. Join us as we dive into the fascinating world of gold and silver inventories, guided by the expert insights of none other than Andy Schectman. Andy Schectman has been a prominent figure in the financial services industry for more than 25 years, during which he has served as president and owner of Miles Franklin Precious Metals. Brace yourself for an eye-opening journey that reveals the astonishing acceleration in central bank gold purchases and the astonishing implications it holds for the global economy. Get ready to witness the untold secrets of COMEX gold and silver inventories in a video that will leave you captivated until the very end. Let's listen to Andy as he speaks.
100%. I believe that to be the case 100%. I mean, look, why did the BIS reclassify gold in 2019? Why did all the central banks, the German Bundesbank, the Bank of Austria, the Dutch National Bank, the Bank of Hungary, Turkey, Poland, the Czech National Bank, why did they all repatriate their gold from the Bank of England and the New York Fed? Why have the central banks bought more gold in the last 18 months than at any time in history? Why did they buy more the first quarter this year than at any time in history? You mentioned Singapore. They are number one on the list this year, right behind Turkey, who was number one last year. Look at the amount of gold imports or exports rather out of Switzerland. Again, this month, number one, China, number two, India, number three, Saudi Arabia. These countries are massively accumulating gold, and not just the countries that have applied to BRICS or the members of BRICS. But yeah, I think that what gold represents is, truthfully, will be a cornerstone to whatever new system arises. I think that it's very difficult to get people to drink the Kool-Aid again after the mismanagement of the dollar as the world reserve currency. And what gold represents, not only to the BRICS, but I think to all of the central banks, is stability. It is a tether to the fact that politicians throughout all of history have chosen inflation over austerity, and you will not be able, I think, to issue a new system if it is not backed by something. So yeah, I think this is real this time. The most well-funded, well-informed, and influential traders on the globe are showing us this. They are massively accumulating it, and if the price alone was indicative of the value, not only would I ask, why are the central banks buying it the way they are, but I would also ask, who the hell is bleeding down the world's exchanges? Whether you're talking about the COMEX, which is showing the lowest level, the second lowest level of silver in the history of the exchange, and gold being bled down as well, even more on a percentage basis. Look at the London Metals Exchange. Look at the Shanghai Gold Exchange. You are seeing massive deliveries of both gold and silver off of the exchanges by not only the most well-funded investors on the planet, but the most well-informed. And when you draw down supplies from COMEX and LBMA, it's more than just saying they're taking delivery. It's incredibly sophisticated. It is not an easy thing to do. And when you leave those ecosystems as a big institutional buyer or industrial buyer, you lose all industrial liquidity. It is a one-way ticket when they leave the COMEX, when they leave the LBMA. These are one-way tickets. Just a couple of weeks ago, we had the largest one-day withdrawal of silver ever off the Shanghai Gold Exchange. This is not just a Western phenomenon. You're seeing globally a drive to accumulate gold and silver and to use the suppression, the Western suppression of price, to run cover for the massive and rampant acquisition. So yeah, I think this time it seems a little bit different to me. I was looking last week. I had surgery last week, and so I was laid up for a while, and so these numbers are a week old, but for the year, as of last week, there was about 13,000 silver contracts delivered that stood for delivery, or 65 million ounces off of COMEX. And, that's a massive amount. We had 240 tons of gold delivered since the beginning of the year off of COMEX. And as I was looking at it a week ago, I saw that over the previous 7 days, 55 tons of gold had been delivered over the previous 7 trading sessions. This is a rising tendency. We've seen recently BlackRock purchase $175 million worth of PSLV. And this is on top of the fact of a 237.7 million ounce deficit in 2022 in mine supply versus demand, the second annual deficit. When we look on COMEX right now, there's somewhere in the neighborhood of 27 million ounces in the registered category. Only 27 million. Those are the bars that back the contracts that are out there. And, there's, 5 times as many contracts or open interest as there are bars backing the whole system. When you talk about 27 million ounces, sounds like a lot, right? Well, India imported 304 million ounces last year. The previous 2 months in what's called exchange for physical, where contracts on COMEX are exchanged for physical and delivered off of the LBMA, almost 250 million ounces. You look at the total number of ounces on COMEX right now, it's about 273 or 4 million ounces, of which only 27 million ounces are up for sale. The majority of it belongs to people who have no intention of selling. Over half of it supposedly belongs to JP Morgan and the SLV, largest silver trust in the world. There is basically no silver on an industrial wholesale level, really hardly anything available for delivery when you factor in the fact that the number of contracts written against the bars for sale are exponentially higher. This is the same thing the Hunt brothers noticed in 1980. At what point can you continue to naked short a market where if you get called for delivery, you're not able to deliver? I'm not saying we're imminent threat of seeing the COMEX collapse, but we're as close as we've ever been. And so, I think that silver is probably the most undervalued asset on the planet.
So, Andy Schectman's insightful analysis sheds light on the current state of the precious metals market, particularly gold and silver. Through his video, he highlights the significant actions taken by central banks, the growing accumulation of gold by well-informed investors, and the diminishing levels of precious metals in various exchanges. These observations suggest a paradigm shift in perception and reflect a renewed interest in gold as a valuable and stable asset. Schectman raises important questions about the reclassification of gold by the BIS and the motivations behind central banks' repatriation of gold reserves. The sophisticated strategies employed by market participants to acquire gold and silver, as well as the decreasing reserves in exchanges, further support his argument for the undervaluation and potential scarcity of these precious metals. If you're interested in watching more videos like this, be sure to like and share the video and subscribe to the channel for exclusive content. Stay tuned for future updates.